Hey guys, this is Mark from TRADEPRO Academy, and in this weekend's video, we're going to be talking to you about understanding futures contract trading codes. So let's get at it. All right, traders, so here we are back in front of this whiteboard, and I've gone ahead and filled this in with a futures contract trading code, a little bit of information here, and what looks like a calendar. So this might be a little bit confusing at first, but let me explain. So what's the purpose of these futures contract trading codes? Well, they originally came from the trading floor, and they were meant to convey as much information as possible with as few characters as possible. And this essentially came from the trading floor and migrated into the electronic environment. So what is a contract display code? Well, these are typically 1 to 3 letter codes that identify the product, following by the month of expiration, and followed by the year of expiration. So what you see right here is an actual futures contract trading code, and I've broken this down by those 3 parts that I just mentioned. So the first 2 here, ES, this is your product code. The letter after that being the F, this is your monthly code, and the final digit here, the 9, that is your yearly code. So these trading codes will vary based on your platform and based on the asset class. However, this is a good general guide here. So your product codes, some of the main markets here, S&P 500 futures, the product code is the ES. For your NASDAQ, your product code is NQ. For the Dow Jones, your product code is YM. And crude oil product code is CL. Next over, you'll see what looks like a bit of a calendar to you. And so this calendar is showing you that each month has its own letter that represents the actual expiry month. So let's read them through. January's letter is F, February's letter is G, March is H, April is J, May is K, June is M, July is N, August is Q, September is U, October is V, November is X, and December is Z. And so you might notice as well that we've got this bottom line highlighted here in red. And so the real purpose behind that is that equity index futures will expire quarterly, which means they'll expire on March, they'll expire on June, in September, and in December. So for a majority of the equities indices, what you'll actually see is that they'll have either the H, the M, the U, or the Z, and they won't have any of these other months. However, for different assets such as crude oil, which settles on a monthly basis, you will see each one of these codes used throughout the year. So with that said, that's kind of how you put together this code here. So in this case, you've got the ES, you've got the F, which is a January contract, and you've got the 9, which is the yearly code. So this contract itself is the S&P 500 contract. That's the January contract, the January 2019 contract. So that is how you would use this. And now, just before we sign off, I'm gonna put a quick example on here for you guys. And I want you to put this down in the comments. Tell me what this contract trading code is. I want you to tell me which product it is, which expiration it is, and what the expiration year is. So let's draw it down and see if you guys can put it together for me here. All right, so let's get it together. So we will say, all right guys, so that's the example right here. You've got CLK9. So in the comment section, please go ahead and tell me what contract this is, what the monthly expiration is, and what the yearly expiration is. So I hope you guys enjoyed that video. If you guys enjoy the content that we are pushing out here, make sure to like and subscribe and hit that little bell notification there so that you do get notified anytime that we do go live or upload any new content. With that said, I wish you guys good luck and good trading until the markets are open again on Monday. Enjoy, make sure you guys are putting in work, and we'll see you in the room on Monday. Take care.